Ladies and gentlemen, good day and welcome to Maiden Forgings Limited H1 FY25 earnings conference call hosted by Kirin Advisors. As a reminder, all participants' lines will be in the listen-only mode, and there will be an opportunity for you to ask questions at the end of presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star, then zero on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Ganesh Nalaude from Kirin Advisors. Thank you, and over to you, sir.
Thank you. On behalf of Kirin Advisors, I welcome you all to the conference call of Maiden Forgings Limited. From the management team, we have Mr. Nishant Garg, Managing Director. With that, now I hand over the call to Mr. Nishant. Over to you, sir. Thank you.
Thank you, Ganesh. Good evening and welcome to the Maiden Forgings Limited earnings conference call for the first half of FY25. It is a pleasure to connect with you all today. Maiden Forgings Limited has come a long way since our inception in 1988. Starting as a sole proprietorship, we transitioned to a private limited company in 2005 and became a public entity in 2023. Over the years, we have built a strong reputation as one of the leading manufacturers of bright steel bars and wires, offering a wide range of customized ferrous metal solutions to industries like automobiles, engineering, infrastructure, and much more. Our advanced manufacturing facilities in Ghaziabad have a total installed capacity of 53,000 metric tons per annum currently, dedicated to producing a wide variety of bright steel bars, wires, and pneumatic nails. We place a strong emphasis on delivering value-added and specialized products tailored to diverse customer needs, equipped with comprehensive in-house processes such as annealing, cold drawing, peeling, grinding, and testing. We ensure the highest quality standards. The addition of nails to our product portfolio further expanded our capabilities, enabling us to serve over 500 customers, including exports to prominent markets like the US and Europe. The steel industry globally is navigating a challenging environment marked by subdued demand and volatile pricing. However, segments like defense, railways, and infrastructure are witnessing steady growth, presenting a significant opportunity for manufacturers focused on value-added and specialized products. The Indian government's push for indigenous products in defense manufacturing further complements our strategic direction, providing an encouraging landscape for our entry into the B2G segment. In the first half of FY25, we achieved several key milestones that underscore our strategic progress. Notably, we became a registered supplier to the Ordnance Factory Board, Kolkata, in April 2024. Building on this momentum, we commenced supplies to HAL in October 2024 and NTPC in November 2024 recently. These achievements mark our successful entry into the government procurement segment, aligning us with industries poised for sustained long-term growth. Acquisition of approx 4 acres of land, which will allow us to consolidate 2 existing plants into a larger, more efficient facility, as well as our ability to expand for next 5 years easily. This consolidation is expected to deliver operational synergies and annual cost savings of around 2.5 crore. Additionally, we are committed to sustainability by installing a solar plant at the new site, covering 50% of its energy needs, significantly reducing our carbon footprint. Despite industry-wide challenges, we delivered stable performance in H1 FY25, reflecting the resilience of our business model and the strategic focus on high-margin products. The results are as follows. Total income 109.19 crore, EBITDA 9.77 crore with an EBITDA margin of 8.95%, net profit 4.05 crore, translating to a net profit margin of 3.71%. Earnings per share would be 2.85 rupees per share. Sorry. These results underscore our ability to sustain steady operations while navigating market fluctuations and focusing on long-term value creation. Looking ahead, Maiden Forgings Limited is on a transformational journey driven by strategic initiatives to enhance operational efficiency, expand market presence, and strengthen financial performance. The acquisition of approx 4 acres of land in Modinagar sets the stage for the consolidation of our plants, streamlining operations, reducing costs, and boosting manufacturing capacity with advanced technologies. This move will significantly improve margins and operational efficiency. We have made substantial progress in expanding our global footprint with exports to high-value markets like the US and Europe now contributing 6 to 8% of our production. To optimize logistics and strengthen our international presence, we plan to establish warehousing facilities abroad, which will reduce shipping costs and improve delivery timelines. Key products such as stainless steel, bright bars, and nails, which have seen a 21% production increase, remain central to our growth strategy due to their higher margins compared to carbon and alloy steel offerings. Our entry into the B2G segment through our maiden order from the Ordnance Factory Board positions us to capitalize on the immense potential in defense and infrastructure driven by the government's indigenization initiatives. We have successfully expanded into the B2C market through the sale of coil nails on Amazon India and now planning to broaden our reach by launching on Amazon US and UK. We are diversifying our portfolio by venturing into high-demand products like stainless steel, screws and wire meshes, which will bolster our position in high-margin segments. Sustainability remains at the core of our operation. Planned solar installation at our consolidated facility will reduce our carbon footprint and align with global ESG standards. Financially, we aim to reduce our debt to less than 10% of our annual turnover through proceeds from surplus land sales and funds raised, further lowering finance costs and enabling reinvestment into growth initiatives. Our long-term vision is to establish Maiden Forgings Limited as a premium brand recognized for quality and innovation, catering to B2B, B2C, and B2G markets both in India and internationally. In conclusion, H1 FY25 has been a period of resilience and progress for Maiden Forgings Limited. Our strong foundation, strategic focus, and relentless pursuit of operational excellence position us well for sustained growth in the coming quarters. I now invite you to ask questions regarding our financial performance, operational strategies, and growth initiatives. Thank you for your time and continued confidence in our company, Maiden Forgings Limited.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handset while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Vaibhav Kapoor, an individual investor. Please go ahead.
Sir, you were talking about a reduction of, debt by, land sales and this new facility that you have, 4 acres of land that you have bought. So could you just run us through the numbers of how much you paid for this 4 acre of land and, how will you, what kind of realization will you get from the selling of the existing facilities?
Vaibhavji, I can give you the exact details later on, but for now, I will
Yeah, rough.
roughly tell you that, the acquisition has already been made completely. The construction is going on currently. All right. So ultimately, it should cost around 20 crores. The new land with construction and bit capex and all. Okay. It should roughly cost around 21 crores. Okay.
Okay.
And like we said that, some of the proceeds from the land sales, because the land sales has not currently occurred. Okay.
Okay.
It's under process, but it hasn't occurred completely. The complete transaction has not happened. It will happen somewhere, like the first transaction should take around 4 to 5 months from now, once we have shifted the facility, one of the facility. Okay.
Okay.
So post that, you can, like we said, that some of the major part would be for debt reduction, and which should bring our number to, like, the debt currently, the working capital debt and every debt combined, it should come down to approximately 10% of our total sales, after those lands have been sold. Okay. And some part would be used in the working capital.
Okay. So in this September balance sheet, what would be the amount that you've already incurred for the new plant, and what would be the remaining amount, if you could?
Approximately 11 crore has been already utilized.
So 9 will be the balance there.
Yes, approximately.
Okay. And could you give some kind of a rough, even a range for, when the total...
The land acquisition has completed in those 11 crore.
No,
Only the
I'm not
construction
talking
part
about
is...
the land acquisition of the new plant. I'm talking about when you make the sale of the old plants, along with whatever, and you'll go for the reduction of debt, what would be that amount, that range?
That's what I'm saying. We should be able to manage all these things post that sale proceed. Approximately 4 to 5
The reason why
crore
I
would
ask
be...
this question is because it becomes a little fuzzy, because you've given an overall debt reduction number. But then,
Right.
as time goes by, there'll be a working capital change, there'll be a turnover change. That's why I said that if you could give me a range for just that land asset,
Approximately, you can say 30 crore.
Approximately 30 crores. All right. That would be all from my side. Thank you so much, sir.
Thank you. The next question is from the line of Nishant Gupta from Mindwalk Global Capital. Please go ahead.
Yeah, so 2, 3 questions. One is, why did the sales and, the margins, et cetera, fell in this particular half year? If you can elaborate more on this particular point. That the first.
Sorry, your sound is like not exactly clear. Please, can you repeat it?
Yeah. Is it better now?
Yeah, it's better, much better.
Yeah. So, I'll start with the first question. Like, why is the revenue, declining in this particular half year as compared to the previous half year, and obviously the margins, et cetera? So if you can throw more light on this, like what went wrong and how do we see the growth going forward?
Okay, Nishanjit, thank you for the question. See, the profit margin is approximately at the same percentage. Okay, the revenues have dropped. Despite, I'll tell you some other figures that was not there in my presentation. Okay, so first and foremost, we have increased the number of customers, regular customers, from 450 to approximately 500 now. That means over the last 1 year, we have added on approximately 50 new customers. That is 10% more, which includes one of the global big player who is buying like approximately शायद अभी तक average 2 containers per month तो आ ही चुका है. Order in pipeline always there are 4-5 containers from them. So despite these factors, जिसमें 2-3 बड़े customers हैं और बाकी remaining जो हैं छोटे customers हैं. So despite this, plus the entire volume is slightly higher vis-a-vis H1 24, financial year 24. वॉल्यूम ही थोड़ा सा ऊपर है, तो इसके डिप अब अराउंड जो है टोटल रेवेन्यू में, दैट इज अप्रोक्सीमेटली अबाउट 3%. एंड दैट डिप इज मेजरली फर्स्ट एंड फॉरमोस्ट the steel prices are at rock bottom. We expected last year that was the rock bottom, but this year it has gone down by approximately 7 to 8% vis-a-vis last year average pricing. So that is one major reason. And second major reason is we have retained almost all customers while adding on to new customers. I'm not giving the exact figure. I also don't have, but whatever research we have done, that none of our customers have left us or new entrant, some new supplier has come to them and they have shifted some part quantity to them. That kind of activities haven't happened in these 6-7 months. But the overall demand approximately from our customers, those were existing plus the new customers, they have only about, 60% to 70% demand of what it used to be. So, whatever we have maintained at the similar level, that has been, despite the incremental effort that we have put in to acquire new customers and, generate new sales. And that was purely, you can say, the market operations at play, such as the high volatility of prices, like I mentioned in my presentation. So these two reasons, that is first and foremost, the overall slump in the demand for last 6 months, as well as the pricing fluctuation and, the lowered prices vis-a-vis last year and last to last year. These were the two reasons.
Got it. Perfect. So, just one number point on this one. So, this half year, your capacity utilization was 70%. What was it last year?
Approximately 70%, 68, 69.
Okay. So then it's okay. I get it. Okay. Sir, moving on to the next one. Since you have highlighted in your presentation that now you're registered with government for ordnance, factory, road, etc. So, can you explain in more layman terms, like ऑर्डर का क्वांटम कितना हो सकता है, कितना रेवेन्यू का पोटेंशियल है, एंड what are you targeting as a company from this particular thing?
Like we mentioned that, we haven't ever in 36 years of the company's existence, we have never done any orders for the government organizations. This is the very first time. In January, we started targeting the B2G segment, and that was majorly because we identified last year that, there are multiple, even in railways, defense, etc. All organizations are utilizing bright bars right now in alloy steel specifically a lot, as well as the nails, the pneumatic nails and everything they are using for, if you have seen on roads, sometimes you come across vehicles carrying defense equipment and all. So they are getting loaded in the boxes, wooden boxes and all. So for their packaging, they use nails a lot, as well as for the border fencing and all those works, they are using our products. So the potential is very huge. Currently, since you also must be understanding that once the company starts, they don't get a bulk order straight away. If they are very much lucky, then they get. Otherwise, they start from smaller orders. We have already served last month to HAL, and this month we have supplied to NTPC, our first order. So the potential is huge. Right now also we are, filling up tenders, multiple tenders, with some of smaller quantities and some of huge quantities. And we are also, because we are first time entrants, we are also understanding the market, but looking at the volume of tenders that float for our products, it seems to be huge.
Okay. HAL and NTPC का सर ऑर्डर का साइज बताएंगे कितना था अपने डिलीवर किया जी?
I will have to check the exact, but it was not very big. But yes, good for the starting.
Okay. Sir, I get it. So one last question. On this capex front, right? I couldn't connect everything, although I heard. So existing आपकी capacity 53,000 metric ton per annum की, right? आपके पास land already आ गया for expansion, right? So अभी मतलब are you planning to double the capacity? That is the plan? If I heard correctly.
No, not at all. I have, I don't know whether you have attended earlier earning calls or conference call with me, something like that, or a Zoom call. But my policy is very simple, that we are approximately producing every month, अगर roughly हम बात करें तो 3,000 metric ton of steel, bright bars and wires in all types of steel. Okay, nails is over and above that. So our growth and expansion plan is always focused on increasing, obviously the top line will also increase since we will go for high value products, but the product mix is changing gradually. So जो bottom line पे हमारा focus रहता है, for that what we are doing is our expansion plan has been well defined from beginning that we would be going for multiple forward integrations through which we can reach the end consumer, developing a complete distribution network for our company so that there is brand visibility and, there are far more better margins in those products. For example, अभी हमने pneumatic nails करा है, stainless steel nails करा है last year, ठीक है. Now, like I said even in the presentation, we are targeting for in coming 1 year, once the shifting is done, we are planning for stainless steel screws, fasteners, and product like wire meshes. So majorly in stainless steel because their value is high as well as the margins are high because of lesser number of players in that market. So it's, you can say, a blue ocean kind of a market. So with less competition, less number of suppliers and a growing demand. So we would be enhancing the capacities for bright bars and wire gradually as and when these forward integrations are getting in place and their market is getting developed. So उसके अकॉर्डिंग मान लीजिए सपोजिंगली मैं स्क्रूज का जो है प्लांट लगाता हूँ लेट से 100 या 200 टन का, विच अप्रोक्सीमेटली गेस अगर 200 टन हम मानते हैं एसएस के स्क्रूज, तो उसकी वैल्यू हो जाती है 5 करोड़ की पर मंथ की. ओके, तो हम उतना ही 200 टन के हिसाब से, अभी तो हमारे पास आइडियल कैपेसिटी भी है, बट वी ट्राई टू मेंटेन इट एट मैक्सिमम 75-80% ओनली सो दैट वी कैन कीप इंटैक्ट अवर फास्ट डिलीवरी मॉडल्स. ओके, सो उसी हिसाब से उसी रेशियो में हम उसको इंक्रीज कर देंगे ताकि 200 टन जो स्क्रूज की हमारी वायर बने वो अपने ही प्लांट से बन के और वहां पे अपने स्क्रूज वाले प्लांट को मिलती रहे. सो उससे क्या है कि टॉप लाइन तो बढ़ेगी लेकिन बॉटम लाइन पे ज्यादा अच्छा इम्पैक्ट आएगा. तो दैट इज एट कोर ऑफ अवर पॉलिसी कि हम लोग फॉरवर्ड इंटीग्रेशन में 200 टन 400 टन एक एक प्रोडक्ट का करें सो दैट वी गेट क्रीमी कस्टमर्स and we can serve them better and charge a premium for that.
Got it. So basically,
more or less, you can say एक brand value बनाने वाली बात है.
Okay. So effectively, you're saying that a product mix change करेंगे, you'll move more towards the value-added product, जिसमें margins better रहते हैं, right? But capacity
जब से हमारा IPO आया है, तब से मैं ये कहता हूँ कि हमें आगे जो है हमें we have to go for value addition products. We don't believe कि एक ही प्रोडक्ट की हम क्वांटिटी बहुत ज्यादा सेल करें.
Got it. So just one final question. So considering that अभी आपका प्रोडक्ट मिक्स you can change and you can get better margin. So considering the capacity which you have right now, let's say you run it at an optimum level, what is the peak revenue which
जैसे ही optimum level पे आ जाते हैं अगर हम, that means when I say optimum, what it means इन वॉल्यूम टर्म्स. आज भी रेवेन्यू टर्म्स में हमारा स्टेनलेस स्टील के प्रोडक्ट्स 40% कंट्रीब्यूट कर रहे हैं, ठीक है. लेकिन वॉल्यूम टर्म्स में वो सिर्फ 15% ही कर रहे हैं अप्रोक्सीमेटली, याद नहीं मुझे 12 या 15%. ओके, तो जो है 12 या 15% कर रहे हैं. तो अगर टारगेट हम ऑप्टिमम मानते हैं जब स्टेनलेस स्टील 40% पे आ जाएगा, ओके, उससे कुछ कार्बन स्टील की वॉल्यूम कम भी होगी, ठीक है. बट एट दैट लेवल अगर हम एज्यूम करें कि एवरेज प्राइस लगा ले स्टेनलेस स्टील का सेलिंग प्राइस 250 का, ठीक है, जो मोर और लेस करेक्ट है, ठीक है. तो एट दैट लेवल वी वुड बी एबल टू डू अ सेल्स ऑफ अप्रोक्सीमेटली 400 करोड़.
Got it.
तो जो हम नए प्लांट में कुछ भी एडिशनल केपेक्स करेंगे वो कुछ भी इंक्लूडेड नहीं है. दैट्स द पीक एट 90% लेवल.
Got it. And when you have changed your product mix more towards stainless steel, 40% उस टाइम पे आपके मार्जिन कैसे दिखने लगेंगे? Like what would be EBITDA margin and PAT margin level?
It should be very much incremental, लेकिन अभी उस पर मैं कमेंट नहीं कर पाऊंगा. It should be मतलब जो अभी है उससे far more better, but अभी it's too soon to comment on that.
Got it. Got it. Got it. Got it. Fine. So this year, are we going to achieve what we like any growth over the previous year number?
We should. See, October numbers were far more better. November is still awaited. Frankly telling, see, around Diwali, 10 days plus and minus. Okay. The demand is always, a little bit lower vis-a-vis the entire year. So, because everyone is in Diwali mood, labor is in shortage because of Chhath Puja and all. Okay. But as on date, we have a lot of orders. I don't know the exact order book as of now, but there is a huge quantity. We are running, shorter in deliveries somewhere. So I assume it should be, there should be a growth.
Got it. Got it. Fine, Nishant. Thank you.
Thank you, Nishant. Okay.
Thank you. Ladies and gentlemen, you may press star and 1 to ask a question. The next question is from the line of Karthikeyan, an individual investor. Please go ahead.
Yeah, thank you, team. Hi, Nishant. Nishant, I have 3 or 4 questions. Yes, I have 3 or 4 questions. Number 1 is regarding the increase of authorized share capital.
Right.
In the last thing it has been discussed, and you have been saying from 15,000 crores to 15 crores to 20 crores. How it is making? Yeah.
Correct.
That is number 1 question. And number 2 question.
What was the question? What was the question in that?
Yeah, about the increase authorization of increased share capital. When it will be happen? Do we get any bonus shares? Or
see, I wouldn't just until and unless something is finalized, I won't comment on that right now, because nothing has been finalized. That we have done as a precaution if something happens post this quarter or maybe next quarter. So we have, because we were almost at the ceiling of our capital. I think the authorized was 15 crore and 14.6 or something was already, issued out of that. So we did that so that if we had to take any corporate action, so we can, we have a scope for that. That was the reason behind it.
Okay, fine, sure. Okay, and another one is, in the last meeting you said that you'll be migrating from BSE to NSE. Migration may happen like that. You have given a hint in the last meeting. Will it be in the near future?
No, it was for migration to the main board, first and foremost. And whenever we migrate to main board, our efforts, our target is to move to both the platforms, NSE and BSE, both the exchanges.
Okay.
So that is the target.
Okay. Will it be in the near future, or it is in the pipeline?
See, I have certain, perspective about that, at a particular revenue level, I will shift it over there, which we should achieve in the next financial year, which I can't disclose right now because I can't give any guidance, right? So next year we should achieve that number, possibly, if the market also favors, which should favor because the cyclical time of a steel should come in the next financial year. So we should reach that number, and post that, once we are ready, we would be making efforts to shift to the main board.
Okay. And regarding the plant migration, that is to the new plant,
right.
When the new plant will be completely operational, and when are we shutting down existing plant?
See, it won't happen in one day. Ek shutdown or one of the plant is getting shut down and that will be operational. It is an ongoing process which we target complete. If you say complete shifting, I won't say shutting down one plant and making another plant fully operational. It would be machine by machine.
Okay.
Got it? Because we have multiple units of machinery, so it will happen one by one, right? So we will be seeing, because, for example, I'll give you one example. One of the major machine is combined wire drawing and bright bar, serial complete drawing line. So we have 4 of them. Okay, so we would be shifting them one by one. One machine shifting takes approximately 1 week time to dismantle as well as to install it and make it running. So you can say 4 machines will shift in 4 weeks. Parallel to that, some other machine would also be going there. So the entire transition, one of the units should shift completely and become operational by March or April.
Okay, I'm getting you.
And then another 3 months for the shifting of second unit. So maximum by September 30th next year, the entire plant should have been, the older both units should have been shut down with no machine over there. And there would be complete operations would be at the new facility.
Okay, fine, sure. And regarding the ordnance factory of Kolkata, regarding the ordnance factory beddings, to my knowledge, it is a very high competitive place, I believe so. How we are mitigating this competition and we are upfront to the competitors?
As far as my experience of this year says, for HAL and NTPC, like we supplied, right? So the margins were better than any other supplies that we make.
Okay.
So first and foremost, that also depends on the product cost. For example, I'll tell you for NTPC order, we supplied approximate, one special grade of alloy steel in hexagonal and square shapes, right drawn bars. So for that product, I very well knew that there won't be many suppliers bidding for it. So we have that kind of products. So you also understand that otherwise those products normally the customers don't ask, the private sector customers. So I knew that there was a scope for exclusivity over there. So we successfully delivered. So there you can understand in such categories there are high chances that you don't have to compete much. So it all depends on what product they are buying. For example, if even ordnance factory would be buying a simple, say, HR coil or CR coil, which are not our products. They are very commoditized items, right? So there maybe the competition is very high. But it's like we have always said that one of our USP is that we can provide most precise products in terms of, whatever the specification of that product is, because we have all the facilities in-house. So we have those capabilities and we are targeting those kind of products for government supplies.
Okay. And I have still 2 more questions. One is we participated in the German's exhibition and during the March and
April 2024 we participated.
Yeah. Did we win any big orders from there?
Yes, we have we have already delivered 2 containers to that customer, and it's a continued business. So right now you must know that Europe is under crackdown, so all demand is low, very low.
Yes.
Plus the financial year closing for them is on December 31st.
Okay.
So it's always usual that they usually order in December's mid before going to Christmas holidays for the next financial year. November is usually dry from our customers in Europe and US.
Okay. And one last question. Can you just comment on the share price which dropped almost 40% from all-time high? Any comments from your end?
Was 40% from all-time high was all-time high was I think last November or something. Okay.
Yeah, it was 130 something. From there it is almost 40%.
So that I feel like that the share price is going as per the Sensex right now. What my observation is. So because we don't intervene in any way in these activities. We are just I have always commented that we are more driven towards performing as well as ensuring that performance is conveyed rightly to the investors and potential investors. So maybe the overall market sentiment and the steel market sentiment has made that happen.
Okay, fine. Okay, yeah, that's it from my side.
Okay, Karthikeyan, thank you so much for the question.
Yeah, sure.
Thank you. The next question is from the line of Vikas, an individual investor. Please go ahead.
Hello.
Hello.
Yeah. Hi. So hi, Nishanji. Good afternoon. Basically, I wanted to know, as you said, we are operating at 70% capacity number right now. So,
Correct.
but what is your target in terms of ramping up of this capacity in H2 for this financial year, in the next upcoming financial year? What is your internal target?
It's of if you see, we have common machineries for stainless steel, alloy steel, and carbon steel. Okay, so I won't exactly comment in terms of volume. I will tell you in terms of the revenues that our target annually for the growth is somewhere between 15 to 20% in the top line. That is our internal target. That we target that every year we target 20%, but we consider it decent if in our kind of nature of industry it happens somewhere between 15 to 20%. It's decent. Okay, considering obviously like the last 6 months were for me also little bit unexpected because the steel prices went down by like 8%. Considering the same level of pricing, not even incremental, but same level of pricing. So it should go up by around 15 to 20%. So that is our internal target, like you asked.
So basically, you meant to say overall top line growth will be driven by the volume growth rather than the pricing. Correct? That can we understand from this?
Correct.
If you are
Correct.
15 to 20% growth, because I believe steel prices have corrected almost.
No, like last, I tell you, I'll go a bit historic in this. Last year we had a growth of around 8%, 8.5% average pace. Okay. But that was again last year also the prices dropped by like 10 to 15% in stainless steel and carbon steel. Last year, vis-a-vis financial year 2022, the overall volume growth for us was around 18.5%. But the reflection in the revenue top line was just 8.5%. So that was majorly due to drop in the steel prices. But see, if we are losing on the top line revenue due to falling prices for 2 years, then the third year is automatically bound to cover that up. Because historically talking, in 92 the steel prices were around 3 rupees, 4 rupees per kg. And currently, I'm talking about the cheapest one, the commercial steel. So currently they are at around 44 rupees level. So ultimately the inflation will impact. So every 2, 3, 4 years, the prices are bound to take correction.
Okay.
So yes, it will average out.
So, Nishanji, understood. So, last question from my side. So, in your presentation, you have mentioned you have started supplying to audience factory for this defense kind of products to the government entity, the South of Kolkata. So, and you have started supplying.
I'll just correct. We got registered with the ordnance factory, but as of now, the orders that we have delivered are to HAL and NTPC. Till now, we haven't secured any order from ordnance factory.
Okay, I think I believe in presentation it was mentioned we have started. We have got the first.
We
order
have started supply to the in September and October. We also delivered that, but that was to HAL, that is Hindustan Aeronautics Limited.
So can we know the size of the order amount? How much it was?
Like I said earlier also one gentleman asked. No, it's a repeat order. Like the tenders keep on coming. So the order size was not too big, not too short. Like I think it was around 10 lakhs roughly, as far as I remember, in value.
Okay. And how do you see it is scaling up at where level?
Sorry?
Potential? So how do you see in terms of potential, in terms of
Potential also, Vikasji, potential is very huge. Everyone knows that in defense and everything, and we are by now we filling the tenders and everything and delivering to orders. We have realized that there are lots of tenders coming up every month for the products that we can serve, manufacturing them in house.
Okay.
Whatever we have got the approval for. Thank you, Vikas.
Yeah.
Thank you. Ladies and gentlemen, you may press star and one to ask a question. The next question is from the line of Chirag Yadav from Raj Industries. Please go ahead.
Hello, am I audible?
Hi, Chiragji.
Hi, thanks for the opportunity. My first question is, can you please discuss the rationale behind targeting high margin products for the future growth?
The rationale for selling the high margin products?
Yes, exactly.
Chiragji, simple. We can either keep on growing just the top line and keep asking for funding in form of equity or debt to finance the enhanced working capital needs as well as the capex needs, or we can strengthen the company's bottom line and make good reserves and surplus for the company so that it can be utilized, the own funds of the company can be utilized for the future growth. So that is the rationale.
Okay, so are there any plans to further diversify the product portfolio beyond the current range of steel grades and shapes?
Yes, definitely. See, I particularly talk when we are, when I talk about that in future we would be doing stainless steel screws and fasteners, I talk about entirely complete new product line. All right. The range of shapes, grades, everything that keeps on happening on day-to-day basis. That is something for us because the product line is same. SKUs may have gone beyond 3,000 right now. So that we keep on doing depending on the customer demand. Like if they are demanding, we have our in-house R&D department with experience of more than 25 years. Also, some people are there who have more than 25 years of experience in stainless steel bright bars and alloy steel bright bars. So they keep on, we keep on doing hit and trials. Like for example, अभी मैंने NTPC के ऑर्डर का बताया कि उनको हमने X और स्क्वायर दिए, जो मुझे पता था कि बहुत लिमिटेड लोग ही हैं इंडिया में जो उसके लिए कोट करेंगे, तो हमने अभी वो करके दिया, तो it happened on the spot. So that we keep on adding. Hello? Am I audible?
Yes, sir. Chirag, I hope this answer your question.
Yes, ma'am. That's right.
Yes, thank you. The next question is from the line of Vaibhav Kapoor, an individual investor. Please go ahead.
Yeah, sir, I wanted to know the volume change between the first half of this year, first half FY25 versus.
It was approximately, I will tell you, 6%.
So there's been a jump of 6%.
Yes, right.
So, sir, if you could give some kind of an understanding.
No, just a moment. 7-8%.
Okay, let's say 8%. So what I understand is there has been an 8% volume jump. There has been about a 15% EBITDA decline, right? And you are saying that 7 to 8% of this was attributable to a reduction in the steel price. What is the reason for the decline in the overall EBITDA, considering the volume?
See, I haven't analyzed that that much thoroughly because in a manufacturing concern, EBITDA can fluctuate from quarter to quarter. That is not because
6 months, sir. And
yeah. That's what I'm saying. For example, we exhibited in Germany that alone costed around 25 lakh, no, 35 lakhs. Just all the visiting and everything. So maybe that is one of the factor. Second factor could be that we acquired the land. So there was a few extraordinary charges over there, which doesn't come in the gap of PAT and EBITDA, right? That is deducted before EBITDA. So these are the two major reasons that I can. I don't know the figures. I am not commenting exactly, but more or less I can see there are such reasons in every quarter or in spaces.
So let me elaborate on this question a little forward. So if you take like FY23 to 24, there has been an 18% volume jump as per your investor presentation. But your EBITDA is more or less remained the same, or there's not been a consequent jump in your EBITDA, which means your EBITDA per ton or the EBITDA has declined. EBITDA per ton has declined, definitely.
No, so, now again,
now this is a full year, sir. If you could give some kind of an understanding.
Now this is a full year. Last year, no?
So FY24 and FY23, as per your investor presentation only, there's been an 18% volume jump. But after EBITDA 18% का jump नहीं आया है. So that means that there has been a decline.
Correct.
You're saying that you're going for higher value add overall, then there shouldn't be an EBITDA per ton decline in it for the entire year, right?
Okay.
So I'm not understanding this. If you could give some color.
Yes. See, I think you didn't attend our last IR call. I very transparently told in that during that year, see, we are comparatively newer players in these high margin products, high value added products, right? This is for us also. These are newer products. We have been doing them for last 2 to 3 years, right? Okay. So initially the marketing costs are higher. So last year also we exhibited in Greater Noida, Delhi and Mumbai. There were 3 exhibitions. We also appointed our agents in the US markets last year. Okay. So now they take on commission basis, like they have a percentage in the order value itself or the margin itself. Okay. But at that time, initially we had to pay them some amount upfront. Okay. So last year the marketing costs to push these products went higher. So there are n number. See, when we are handling 2-3 plants and we are trying to go fast, there would be some extraordinary expenses at initial stage. Then it will start stabilizing. So we are still in a in terms of what we'll say in a listed space, we are still a baby company right now. So we are investing in it so that the baby can grow healthy and fast.
Okay. So just correct me if I'm wrong. My understanding from your commentary is that you are aiming for higher value added products and you are trying to focus on the bottom line. But in the past 1.5 years, you've put that effort, but it's not gone through in terms of higher EBITDA per ton.
Yes, this year it will definitely happen. Last 6-7 months were somehow, like I said previously to one of the gentlemen, that last 7 months have been a very volatile market, and we expected that the last year's investment that we put in to marketing and all, they should have fetched us result, but unfortunately the results were not as expected for these 6-7 months. But definitely, like, markets are always cyclical, so it should improve soon. And whatever efforts we have put in, once the market condition improve, I am very sure, because we are not losing any customer. We are not, it's not like that we have not outgrown the number of customers that we had last year. So all the customers are retained. So definitely once the demand boosts, the impact would be, come at one go, and it will be shown in the results as well.
And so my last question is linked to the first question I asked at the start of the phone call, which
Right.
is that what I understood is that you told that there'll be an additional capex of 11 crores to set up the new plant, and you should receive something in the range of 30 odd crores when you sell the existing plant, right? So by that logic, there should be about a 20 crore cash inflow net, because 11 crores is what you'll be expending and 30 crores is what you will receive. So the differential is about 20 odd crores, and your current borrowings are about 75 odd crores. So
No, not exactly. No, not
I'm
exactly.
missing something. If you could elaborate here.
It is around 63 crores as per my knowledge. Best to my knowledge.
I'm looking at the screener numbers, and the screener numbers are saying long-term.
I will check that back. But as per to the best of my knowledge, it's 64 crores as of now.
Okay, even if you take 64 crores, which is the number you're saying, let's take that, and you reduce 20 crores, that's still a 40 crore, net borrowing, and there'll be a working capital increase as you increase your volume, right?
Right.
So in your commentary, you're saying that there'll be a 10%, 10% of
the
turnover is what you
volume.
want to keep your
Right.
borrowing, yeah. So this
I think we can, for this, we can connect back again, okay, in an individual call or something, okay, and we can, connect the entire thing, because there are multiple accruals. Like, for example, for this, we will have to go deep down to that. What is the assumption that we have taken that in another 1.5 years, 18 months time, what would be the profit accumulations that we will have? What would be the entire net inflows of funds? So then I can give you
I
a better...
a gross estimate where I said that the excess
Right.
cash flow that will
Because you are
the profit
considering...
is,
Exactly. You are considering...
helps in the increase in the working capital, there's still a 20 crore differential.
Correct. That you will find, but with the profit...
But I'll be happy to, go deep in this.
Sure. Done.
Perfect.
Okay.
That will be all from my side. Thank you so much, sir.
Thank you, Vaibhavji. Okay.
Thank you. Ladies and gentlemen, you may press star and 1 to ask a question. As there are no further questions from the participant, I now hand the conference over to Mr. Ganesh Nalawade for closing comments.
Thank you everyone for joining the conference call of Maiden Forgings Limited. If you have any further queries, you can write us at research@kirinadvisors.com. Once again, thank you everyone for joining.
Thank you. On behalf
Thank you, everyone.
Thank you, sir. On behalf of Kirin Advisors, that concludes this conference.